Good morning everybody and welcome to this European session on Friday the 6th of September. So we've finally made it to the end of the trading week where now we start to have the highest impact news announcement of the week. All eyes are now on the US Non-Farm Payroll Report, which is going to be released at 1:30 p.m. UK time. And this basically measures the change in the number of people employed during the previous month, excluding the farming industry. And job creation is a leading indicator of consumer spending, which accounts for the majority of overall economic activity. 164,000 jobs are expected to be added to the economy in August. And it's also expected the unemployment rate will fall as well. Now, the markets are pricing in a 41% chance that a very soft jobs report could actually trigger a 50 basis point rate cut. So look, as you already know from the webinars that you have already been attending, all the focus has been on the US dollar and the Federal Reserve cutting interest rates, which is a foregone conclusion that they're going to do that this month and join other banks like the ECB, Swiss National Bank, Bank of England, Bank of Canada, who are all doing the same thing. But now, because of recent economic data, so the ADP non-farm employment change yesterday, the manufacturing report earlier in the week, because these numbers are actually a lot softer, showing a weakening economy, now the markets and analysts are pricing in that the Fed will actually cut interest rates even more than expected, a 50 basis point interest rate cut rather than a 25 basis point interest rate cut, right? And so this becomes very interesting. And this week, the economic data, the themes that we've actually been highlighting has actually supported the trades that we're in and the US dollar weakness. But now we're coming into a very high impact news announcement. So trade management, risk and portfolio management becomes quite important here, because the news announcement can be very, very volatile because there's so much expectation built in, and especially if it's very different to what the market is expecting. Now, we don't know what the non-farm payroll report will be. We don't know how the market will react. We don't want to try to, take trades within nanoseconds and compete with the algorithmic traders or taking trades in nanoseconds. But we want to manage risk of our trading accounts beforehand to navigate the volatility. And we also want to look for surprises and any follow through that develops afterwards, so then we can capitalize on that follow through as everyone's kind of readjusting their portfolios, leading to high probability opportunities with a fundamentally led narrative. So now this becomes important for some of the positions that we're already in, and this is an important lesson on risk portfolio management. So let's dive into smart charts and have a look at this. Okay, so first of all, we've had a couple of trades at the middle week towards the end of the week that are still running, and both of them are US dollar pairs. If you recall, we had the US dollar Swiss franc trade here to the short side from the power pivot strategy inside of MasterTrader. I'm just using the market breakout strategy here. It's the screen that we're on. As you can see, it's getting very close to the target level. We also had a trade on Euro US dollar, okay, from the phase changer here on the daily chart, okay, as it came back into this moving average zone. Now, in this instance, some of you might have already banked your gains on the Euro US dollar. Some of you might be trying to hold out for like a higher reward to risk. But look, what we need to understand is these are both US dollar pairs, and they're both forecasting the US dollar to weaken, right? And that's great if the news announcement is supportive of that, and the trades will go even further in our direction, and that's fantastic. But what happens if the news announcement is completely different to what everyone's expecting and the US dollar turns the other way, right? So when it comes to trade management, really the key is psychological management. This is something that a lot of people miss and a lot of people don't talk about. Everyone talks about trade management. Oh, where should I move my target? Oh, will the market go here? Will the market go there? I mean, the reality is sometimes it will, sometimes it won't. Okay, anything can happen at any point in time. You can't predict what's going to happen next. So really the most important bit is psychological management, all right? So you need to think about the scenarios that will unfold and make sure that psychologically you can deal with that. So if the US dollar turned around, okay, and both of your dollar trades went to your stop loss and you had 2 losing trades and you've ended the week in the negative, will you be happy with that? Will you be able to go into the weekend, very confident in your ability, in your trading, motivated, inspired to turn up, next week on Monday and keep trading the financial markets? Or are you going to be regretful on those decisions that you made, start questioning yourself, doubting yourself, and now when you turn up next week, you want to try to get your money back because, you had those 2 losers. So you've got to think about psychological management, because that's going to impact your future decisions, which of course is so important when it comes to trading the financial markets. So for me personally, okay, coming to the end of the week, and it's the first week of the month as well, I like to end the week on a positive. I like to end the beginning of the month, on a positive, right? Because it helps me to go into next week full of more confidence in what I'm doing and actually continue to trade the markets. So there's a few different options here. If you're already up on the trading account, so of course this is all down to you, but for me, if I'm already up on the trading account, okay, so the trades you've taken already this week, you're net up, then a couple of options is that you can move your stop loss to break even. So for example, if I clicked on the stop loss here and if I dragged it down to just below where the entry price is, okay, then what will happen here, or you can actually just, there's a break even level here as well. If you click on the right hand side, you click on break even, and what that means is, okay, so now I've moved my stop loss to my entry price level. So look, if the US dollar did turn around, then I'll be break even. I didn't actually make anything, I didn't actually lose anything, all right? So that's one option. So that way, look, if both those dollar trades, if you moved your stop to break even and the dollar did turn around, all right, you made nothing on those, you didn't lose anything on those, but you still net up from the other profitable trades earlier in the week. So that's one option, okay? Another option is that some traders will just simply close out their trades. That's it, okay? And simply just, close out their trades and basically just take the profit on those trades, whatever it is. Okay, and that way, they're done for the week, all right? They're ended the week on the high, in the positive, in the green. They can feel happy in themselves. They've done the job. They don't need to be worried about what's going on with this high impact news announcement. Is the market going to go up? Is it going to go down? Am I going to get stopped out? This, that, and the other. They go into the weekend very nicely and, ready to turn up next week, knowing they have a nice little profit from last week to play within the market, all right? Because it's always easier, isn't it? Think about it. If you're up like 2-4% in a week, then when you're trading next week, you've got a couple of trades in your belt to play with, all right? Because if you lost a couple of trades, you're still going to be break even over the 2-week period. So it comes to, people talk about trade management, risk management, but also psychological management is very, very important when navigating high impact news announcements, when you're trading towards the end of the week, okay? And there's no right or wrong. It doesn't matter, right? If you decide to close your trades early at the end of the week. Now, I'm not just talking about, closing a trade early on a Tuesday because you're fearful of losing. No, that's just an emotional decision. You don't obviously want to build the habit in making emotional decisions. What you're doing is that you're managing your accounts, you're managing risk, you're managing yourself, all right? You're looking ahead, end of the week, high impact news announcements. How do I want to feel when the markets are closed over the weekend? And how do I feel when I turn up next week, right? So managing yourself is obviously very important. So look, there's a few different options there available to you. Of course, you're going to decide which options are most suitable for you as an individual, all right? Now, in terms of new trading opportunities, so there's a few things going on here. And actually, yesterday in the Asia session, we did highlight some interesting things going on with Euro against the Canadian, because we have a bit of a change in structure here, which seems to be quite interesting. So basically, if you look on the way up here, we have had price bouncing off these moving averages, right? The moving average zone, as we call it. And it's been quite nice, to be trading off these moving averages. Buyers have turned up here. And what happened here, buyers turned up and there wasn't enough of them to get above this high point, as they have done before, okay? Buyers were willing to buy at low prices, but they were also willing to keep buying above high prices. But now, there's no buyers left willing to keep buying above these high prices. Okay, so buys never got above the high point, and what happened? It came crashing all the way back down. It's actually taking out this low point. So now we actually have a lower low cycle and we have a lower high cycle, and now we can see that the moving average zone, which was acting as a support level on the way up for those phase one bounces, maybe there's a chance it could start acting as a resistance level on the way down. Okay, so we have this sort of change in structure from cycle formations, from an uptrend to a downtrend, and we also have these bounces off the moving averages, which was acting as support, now broken through, that could act as a level of resistance. So this actually becomes quite interesting if sellers are going to turn up here. We also like the fact we are trading around this kind of zone. So if you look at this high points, you know, this low points, there's a bit of a zone here. You can see that the market turned here, market turned here. So maybe the market could turn here as well, right? So we're in this zone where price has been turning historically in the past. So that adds another sort of layer of confluence. You know, could the market turn here again? And of course, you know, could sellers turn up here? So not only do smart charts help us to identify those opportunities, but also help to do the risk and portfolio management work, which of course is the most important aspect of trading the financial markets consistently, sustainably over a long period of time. If we click the sell icon, it will put the entry price to the blue dot, stop loss of the red dot, target the green dot. Of course, all those price levels can be adjusted according to your own user preferences. It will do the risk management calculations automatically at the click of a button. Very important, you keep that risk low so you can manage the random distributions of wins and losses that develop throughout the season, throughout the day, throughout the week. And then we'd like to set expiries just to manage our account from a margin perspective. And I'd like to put a current bar close expiry on this. So if sellers don't actually turn up by the end of the day, because we're trading a daily chart, and if they don't get through the entry price level, this pending trade will just expire and you didn't win, you didn't lose, it didn't cost you anything. But if they did decide to turn up here, okay, and get through the entry price level, then this will trigger into a live open trade. Either it goes to your target level or it goes to your stop loss level, all right? Okay, so big day ahead for the financial markets. Let's see how the dust settles. I'm going to wish you all the best of your trading today. Have a fantastic weekend. We're going to be live and kicking here next week for another fantastic week in trading the financial markets, and ready and raring to go. So let's see what happens there. But in the meantime, have a great trading day. Goodbye for now.